Yeah, I can.
Coming in hot. Coming in, I'm 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 coming in hot. Coming in, I'm 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 coming in.
Good morning. Welcome to today's show, Monday, the 16th of December. And yes, we stream at 6:30 a.m. here in the UK. So yeah, it's early for some, but for me, I just like to catch the end of the Asian range. So I'm already in a trade. We can see here, I got a nice break below the baseline what I'm trading on a 9 moving average. Price has pushed a little bit higher, so we're in a drawdown of 280 at the moment. And you can see the two black lines is the Asian high, Asian low. Good morning, Mandela. Welcome to the show.
Hey, thank you, Andrew. Good morning to you. And looks like you've been very busy this morning, getting things all ready to go. And looks like a great week for trading.
Yeah, potentially my last full week before we break up for Christmas. And it's been a busy weekend. I didn't think I'd be sending about 28 emails on a Sunday, but we'll talk about that later on in the week. So what have you been up to? What's news?
So just try to take the weekend to relax and to unplug from markets for a bit. And this weekend was just that. Had some time to kind of just not look at charts and have a little bit of time to relax. So back at it today. Busy day for news. On the news front, we got quite a bit of news that's taking place. And just ready to go. I think we're trying to get ALEX LERA on. Just getting a message from her saying that she's already in. So what I've done is I've just sent her the link. Let's see if we can get. Oh, there we go. I think she just
it'd be great to get Alex on the show. Let's see what you've been up to for the last year trading ICT. So, welcome, Alex. Good morning. And I think we got you on mute.
Yeah, hi guys. Good morning. Sorry.
Yeah, and sorry for the show being so early.
No, that's okay.
Yeah,
I've been awake for 5 hours, for 3 hours already, so it's okay.
All right, good. It's not just us two that get up early in the morning. We wanted to catch up with you, Alex. Just quickly go through how your trading's been. We know you trade gold and you trade ICT concepts. So, What's been happening?
A lot of movements, a new strategy that I've developed, and I've came to love it, and I've been using only that for the whole year, I think. This year, 2024. It's not that different from the old strategy that I was using that I explained to you guys in short in, when you had me as a guest in one of your other shows. But this one is on 5 minutes and it implies using an SMT divergence. Trading has been good. I've been putting trading on pause for the last 2 months or so because of some health situations. And now I'm just getting back to it. Easy.
So welcome back. I'm glad you're in good health. If you like to share your screen, if you want to go through a strategy, you can. But for myself, I've been trading futures probably the last 6 months. I've been doing some work with Top Step and Apex, and currently running an Apex challenge right now, and it's not looking too good. I'm about 340 in the drawdown this morning, but we'll see how that plays out. So with the new strategy, Alex, what's it involved? Is it similar to what you was doing before?
Let me share my screen. You said I can do that, right?
Yeah.
Okay, just give me a second.
So I'm just gonna say, Mandela, really brave. Camera on this morning. It's too early for myself. Still got my morning hair, right? So yeah, no camera for me today. What about yourself, Mandela? Looking at the S&P today?
Yeah, so my strategy is look at the S&P for the breakout after the New York Open. And I did learn quite a few things from Alex when we had her on our last show. One was just how to be patient during the silver bullet, which is that nice, usually you'll get a nice sort of trend opportunity during the silver bullet. So I don't know if you still trade that, Alex, but that was helpful to me.
It's really good that it was helpful. I still trade the hours of the silver bullet. I do.
Right.
But on the 5 minutes, mainly I'm looking for the same thing that I told you guys I was looking for on the 1 minute. Only with the added thing, like I said a little earlier, that right now I'm also looking for an SMT. I don't know if you guys can see my screen.
Yeah,
Yes, we can see it now.
Yeah? Okay, great.
Yeah.
So, to use an SMT, you basically need a correlated asset, right? Or an inverse correlated asset. But in my case, because I'm trading gold, I'm just considering silver as my correlated asset. This is the 1 hour chart. On the left, we have gold. On the right side, we have silver. And what I'm basically doing, I'm just marking the SMT divergences. So basically, because we're talking about two correlated pairs, we should expect that when one creates a higher high, and let's say gold creates a higher high, then silver should also create a higher high. And, when gold creates a lower low, then silver should also create a lower low, meaning that they're correlated. When this correlation is no longer in place, meaning that, for example, let's say gold would create a higher high and silver would create a lower high, or vice versa. Gold would create a lower high and silver would create a higher high. Then we have a cracking correlation. I've seen many people call it cracking correlation. So that's basically an SMT divergence. And so what I do now, I mark these SMT divergences on the 1 hour chart. You can see many of them. So this is what I've been marking for quite some time, right? And then I mark those areas where we had the SMT as being my liquidity areas. So for example, we have in here around the 9th of December, the 9th and the 10th of December, we can see that gold created a higher low, okay, in here, whereas somewhere in here, silver, this one, you see, silver created a lower low. So in this case, to me, it's a cracking correlation. So basically what I'm doing, I'm using silver as the indicator, and silver is basically telling me that gold on this push to the downside that is doing here is being oversold. So that's basically a good condition for me to go long because the trend was already long. And what I'm targeting is old areas of SMT buy side liquidity, which you can see that we had here to the left side of the chart. That would have been one of them, right? This one, okay? Now, this is for grabbing like the overall direction of the market, okay? And for the overall entry, I would just drop down to the 5 minutes. The session that I trade right now mostly is a New York session, New York kill zone basically. So I would just look for the same thing, for example. Now, I haven't been trading for a week or so you won't see a lot of things in here on my chart, like a lot of trades. But I kept doing my analysis as if I would be trading, right? So for example, what I would wait for a trade on New York, I would wait for either price to sweep buy side liquidity or sell side liquidity above or below previous sessions, like previous London high or London low, Asia high, Asia low, previous daily high, daily low, or previous month high, month low, whatever. And then I would wait for a reaction over there. Like for example, what I can see in here is, and let me zoom out a bit, okay? So this is 5 minute. On the left side, again, we have gold. On the right side, we have silver, right? So I can see that gold has been pushing down, down, down under previous day's lows, previous session lows. So this green shaded area is Asia low. This gray shaded area here, it's London from the previous day. So I can see that gold has been pushing under those lows as well. So is silver doing the same thing, right? So at this point, they're correlated, okay? Now, what I want to see is, because technically right now we are bearish, okay? The overall market is showing a bearish condition. Previously, what I was able to see, the day when I'm doing my analysis for New York, waiting for a trade to happen, I want to see what London has been doing or what Asia has been doing. So if I was trading this area over here, okay, so I was trading New York, right? What I want to see is I want to look on the left side and see what has London been doing. So I can see that London was going down, and prior to going down, it had this SMT divergence where we had gold going higher and silver, so gold creating a higher high and silver in here creating a lower high, right? So at this point, what I want to see is I want to see if London was doing some sort of a continuation from what Asia was doing. So in this case, Asia, we can also see that it went up, right, on both pairs. However, what I can see is that this push to the upside that led gold higher on the Asia session went above this, let's call it an accumulation area. It looks pretty flat, this area in here, whereas the same area that was happening at the same hour on silver on the right side, that was not swept, right? So we have gold creating a higher high, silver creating a lower high, and then gold starts to go down. Then at the beginning of the London kill zone, we have the same thing. Gold creating a higher high, silver creating a lower high, right? So what I want to see is whether we would intend to continue in the same direction, because I can see that Asia started with price going up. So basically the manipulation with the SMT. In this case, we have a liquidity grab on gold, and silver is telling us that there is weakness in the market, right? Because if these two pairs are correlated, there is no sense why, if gold goes higher, silver would not do the same thing, unless there's a crack in correlation. And basically, we would say that in this case, gold is lying to us, right? Pretending as if it's breaking minor structures to the upside, and maybe people are expecting it to go wherever. I don't know. Maybe some people would say, oh, look, this is an order block over here, but it actually isn't, right? And I'm looking to see if London is doing the same thing, and I can see that it's doing the same thing. So the way in which we had a London session beginning, London kill zone beginning, was through the same means as we had Asia, grabbing buy side liquidity, creating a higher high, right? And then creating bearish imbalances and then going lower. So I just want to see if we have a chance of New York doing the same thing. So this other gray shaded area is also New York. So what I want to see in here is I want to see whether I can have some sort of SMT divergence. So in other words, I want to see either gold creating a higher high, right, while silver is creating a lower high, or vice versa. I want to see gold creating a bearish fair value gap, go up into it, not creating a higher high, so just stop into whatever bearish fair value gap it has been created. And while gold is creating, in this case, a lower high, because it just stops into whatever bearish fair value gap it created previously, then silver would create a higher high. So silver would tell me that it's overbought, and that the reason why gold would go up would be only to rebalance whatever bearish fair value gap we would have to the left side, or vice versa. I want to see gold taking buy side liquidity and then silver continuing to go lower. Now, in this case, what I can see, I have this push to the upside, which was pretty relevant, because we can see that it starts to create with momentum, right? Momentum in my, in my view, the way I see momentum is price starting to form visibly bigger candles than it did, or than it had been creating for the past 10, 15, or 20 candles. So if I were to look at all these candles here from the left side, these, right? These are, over here. These are pretty similar candles, right? None of them is too big compared to the other. But if I look at this candle over here, this one at 7:05 New York time, then I would definitely consider that that's a big one, right? A big candle. So what I want to see is, I want to see if this push to the upside is really legit, whether price really wants to continue pushing higher after rebalancing this fair value gap over here, or I want to wait and see whether this push to the upside, which seems to be relevant, was just liquidity sweep, right? So how do I see that? Like in this case, where would I have liquidity? Well, I would consider I have some sort of minor liquidity above here, and I can also see this fair value gap right there, right? Which could be reasons why price would want to go up and manipulate, making everyone believe that it's going to go higher. But in fact, this push to the upside is just a pullback, or it's just a manipulation move. So what I want to see is if this push to the upside went higher than whatever high to the left side we have that silver did not go above, right? So in this case, I have this high. Okay, that one, which this high coincides on silver to this area. Okay. So at this point, I can see that with this like big push to the upside, gold goes visibly higher above that area in here, whereas silver doesn't really do that. You see? So this high at 8 a.m. New York time on silver just creates equal highs. Gold went higher. And then I want to see, so this is basically the beginning of my story that yes, we might actually see the same thing going on New York as we have seen Asia and London kill zones doing, which is what? Gold goes higher, okay, makes a higher high with momentum and then starts to go down, right? Because that push to the upside that looks like a higher high being created is actually just a liquidity grab. And then London kill zone did the same thing. We swept this relatively equal lows area and then it went up with momentum. But now I want to see if this push to the upside is really breaking structure or is just a manipulation. Again, I can see gold making higher highs, whereas silver making lower lows, and then it starts to go down. So in this case, New York seems to be doing the same thing, right? I wait for the manipulation, right? And then I want to see price displacing lower. What I usually look for is a fair value gap on the 5 minutes. That's the ideal thing to look for. And wait, I'm not that good at TradingView, as you guys can see.
I can see you're using TradingView now, which is different from before.
Yeah,
You're good with it.
Yeah. So I can see this minor displacement in here, or like minor imbalance actually. Honestly, I wouldn't necessarily use this on the 5 minutes because this is a little bit too stretched, right? But when I see price creating like a SMT divergence and then a push in the opposite direction on gold, okay, and that bearish fair value gap that gold is creating, that would be my entry point, would not look so relevant on the 5 minutes, then what I do, I just drop down to the 3 minutes or even to the 1 minute. Okay, so if I would drop down to the 3 minutes, in this case, I would see this push. Wait, this displacement, this imbalance. Okay, and this to me, I want to see that price is not going to close candles above here, right? Above this fair value gap, or even more above this candle on whose body we have the fair value gap. Okay, so in this case would be the 809 candle on the 3 minutes chart. And then I either wait for one bearish candle to form to take my entry, or I would wait for two bearish candles depending on how the first one would look like. So in this case, the first bearish candle that I would see that would be like a rejection from that CB, from that bearish fair value gap, would be this one, the 821 candle on the 3 minutes chart. But in my opinion, this would not be such a good candle, even though we have bearish body and big rejection upwick. I would still want to see like a bigger body, right, of that candle. And then in this case, seeing the second candle over here, that would be a better approach to take my entry, and the entry would look like this. I would position my stop loss above this high, just a few pips above this high. If this high was touching whatever bearish order block that we see to the left side. So in this case, the bearish order block for me, it's this candle, 7:57 New York time on the 3 minutes chart. Why? Because it's the last highest up close candle that took price into an SMT divergence, and then price started to create imbalances to the downside. And if those imbalances are going to be respected, and as price went up to rebalance, that bearish fair value gap is touching that order block, which in this case it did, okay, then I'm assuming that price will not come back to that order block. However, if, for example, let's say this candle would not have touched the order block, then I would put my stop loss just above that high, and then I usually target 2R for this setup. So this is...
Yeah, that's really good, Alex. And yeah, I'm a bit of a fan of the fair value gap myself as well. So yeah, no, it's really good. It's really interesting as well, especially the correlation with silver.
Exactly.
I've never thought of it or looked at it. So definitely something I'll be mindful of.
Yeah. So I've had a pretty awesome win rate with this. You won't have a setup every day. There's going to be times when you're going to see like conflicting signals. But whenever I see conflicting signals, what do I mean with this? So like, for example, you're going to see price creating a lower low on gold and then giving you an imbalance, right? Whereas silver would create a higher low. Okay, so when gold would come down into that fair value gap, that imbalance that it created, then I would look to take a long after I would see a bullish candle closing. Sometimes you're going to see that happening at the same time with price creating a bearish SMT. So for example, there was also the case in here, right? So I have this low, the 7 a.m. New York low, and then we had the low of London, right? Which is around here, 454. So if we look at these two lows where gold created a lower low and silver created a higher low, okay? And at the same time, silver is respecting this bullish fair value gap over here. You might have been tempted to take a long trade after seeing that gold made lower low. In other words, is this push to the downside on gold just a liquidity grab? And I would say yes, it is a liquidity grab. If you would see price creating a bullish fair value gap after going lower, okay, and then you would see that bullish fair value gap being respected, which is exactly what occurred in here. I would have entered this trade if I would have traded, right, around this candle, okay, and I would have had my stop loss under this low. So let's just simulate that. My trade would have looked like this, stop loss under there, and then I would have targeted 2R. Okay, now the thing with this kind of trade, if I take it and then I see that an opposite direction trade starts to unfold, right? So in this case, I had a bullish SMT followed by a bullish fair value gap and the respect of that fair value gap. So I enter long, right? I want to see that as gold creates higher highs, silver does the same thing. If silver fails to do that, I'm going to give up on that long trade. I'm either going to close it at a minor win, minor loss, or break even, or whatever. Okay. In this case, I would have closed this trade the moment I would have seen this candle over here, the 8 a.m. candle, closing like that. So I wait for the candle to close. And why this candle? Well, it's simple, because that's the candle that it shows a rejection on silver after silver creating relatively equal highs, but gold visibly went higher, right? So I don't want to see gold rejecting after creating a higher high at the same time when silver is rejecting after creating an equal high or a lower high, right? So this would make me bail on the long idea and then wait for further information to see whether we're going to have a continuation of whatever Asia and London was doing. So yeah, it requires a lot of adjustments to your overall analysis, but it's good because you have a lot of time to do that because you're trading the 5 minutes, not the 1 minute, right? And even though you're going to have conflicting signals, they're not going to happen that often. Like I might wait for a setup, take it, and then see that I have a conflicting signals, give up on the first trade idea, and then never get into another trade, or just get into one single setup, and that's it. That's the trading day. Whereas on the 1 minute, I sometimes felt trapped on waiting for a lot of setups. And yeah, on the 1 minute, a lot of stuff happened. Whereas on the 5 minute, not too many.
Yeah, no, thanks, Alex. Yes, really interesting. And yeah, I'll be watching this back just to go through the strategy again. But yeah, just to go back to silver, I never really thought of it until you said it's a great indication of the price.
Yeah.
So yeah, oh, thanks for that.
Sure.
So
Pleasure.
I do need to jump off at 7 o'clock, so Mandela's going to take the wheel.
Okay.
And yeah, I don't know if you're going to run through the news, Mandela, today.
Yeah, we could do. Alex, do you have any time? Do you have to jump off?
No, I don't.
Okay, perfect. All right, so let's see. Let's have a quick look at what's happening in news world for today. Do you usually trade the data at all? Do you often trade data or not really?
I don't trade the data like as in, oh, I'm expecting that because this news came positive for the dollar, I'm expecting gold to melt. Not in that sense, but I do trade news days as, oh, I'm really expecting to get a nice setup, but I don't usually consider the way in which the data came in.
Yeah, I think I'm very similar as well. Like I am just looking for the reaction and just trade, the opportunity.
Okay. Do I have news today? Okay, then it's going to be a good trading day. Do we? If we don't, then probably it's going to be a flat day. Yeah.
Yeah. Like just really quickly, we usually run through what the major news is for this week. I think the biggest one is probably going to be on Wednesday. We have the FOMC. So I try not to trade in the mornings during that day. It tends to be a little flat. Yeah. And then, usually around, so this would be, New York. These are New York time zones, Eastern time. So that's a big one to look out for. And then we get some more data on Thursday and then Friday morning as well, just to be aware of it. And as Alex said, we're not trying to predict the future or predict what the actual results will be or what the reaction will be. But you have to be kind of prepared for some sort of impact from the announcements. And I think it's just smart to be aware of it.
Yeah, definitely.
Yeah. Okay, so we usually finish up the show around 7. I did want to extend an invitation to you in the new year, Alex, if you would like to join our show for 2025. I know you're very busy. You have a very busy calendar. Do you still do the mentoring and teaching, coaching?
Not that much, no. I'm trying to create space for myself. So little by little, I'm just giving up on that because it doesn't make sense to do it anymore.
I understand. Yeah, I understand. I completely understand. I've tried a little bit as well. And you mentioned health, and I think health is important. Health is a priority. So sometimes just taking a break is the best thing that you can do. You come back refreshed.
Yeah.
And you focus on what's important.
Yeah, definitely.
I was trying to do everything at the same time, and my body, this was probably towards the end of summer, my body was like, it's too much. So you have to reassess the situation. But I do like your new strategy. It seems like it's like ALEX LERA 2.0 or 3.0.
It is.
It's just
it's the same thing that I was doing, only that I'm doing it on the 5 minutes, and I'm also doing the SMT thing, which is it's filtering out a lot of not so good setups or a lot of doubt and uncertainty. It really does. If I have a setup but it's not forming as a consequence of some sort of SMT plus imbalance, then I'm just not going to consider it at all.
It does seem like it's filtering out a lot of the news, and a lot of times less is more. So you're taking the setups that are even have a higher expectancy, higher success rate, higher win rate.
Exactly.
Brilliant. All right, thanks again for coming on, Alex. I didn't have anything else, unless you did. But it's always nice to speak to you and catch up with you.
Thank you. Thanks.
All right, everybody, have a wonderful day. I think Alex is a great resource. Make sure also check out Alex's YouTube channel. That's going to be in the description, and also all of her socials are available as well. Reach out to her.
Thanks.
All right. Have a great day, Alex.
Have a great day too. Bye.
Thanks. Bye.